Joining us now on the show for the numbers is Mr. Jayant Acharya, Joint MD and CEO of JSW Steel. Mr. Acharya, good having you. Thanks for joining in. How would you sum up the year and more importantly the quarter for us? It was slightly above estimates.
Yes, I think we had a very challenging year gone by. The external challenges which we navigated through have been many, geopolitical, trade-related, etc. In spite of which, JSW Steel delivered a very strong operational performance in the quarter. Our production was the highest ever at 7.6 million tons. It grew by about 12% YOY. Our sales were also the highest again, primarily led by Indian operations, which were fueled by a very strong Indian demand. So very strong quarter. As we see going ahead, we see equally strong year in FY26 on the back of a good economic activity in India and strong demand of steel continuing.
Mr. Acharya, China is picking up, but we also have an ADD which kind of, makes our steel prices our own. I'm just trying to understand though, because China is picking up, how does that augur for steel prices and the outlook and thereby your FY26 results as well?
So just a little bit of the background, you know that last year the exports from China were at one of its highest, and we continue to see increased exports from China. So therefore, the safeguard duty which was levied by the government was a very proactive and helpful step for providing a level playing field to the domestic industry. That has helped the domestic industry to be able to recover from the lows which were seen in terms of the prices in December and January, primarily because of dumping. The rest of the world has reacted more or less everywhere with increased tariffs. That has been reflected with improved prices from the lows in those countries as well. So we see quarter one giving an improved price flip vis-a-vis the quarter four gone by, since the prices started increasing towards the later part of the last quarter and in April of this year. So I think better pricing, lower coking coal cost, better operational efficiencies from JVML will be very positive in terms of our margins for the quarter coming in.
Mr. Acharya, what is the guidance that you're giving for FY26?
So on the guidance, we are looking at a 10% growth in this year in terms of volume, an incremental 10% on the back of primarily the India growth. On the pricing and the operational efficiencies pricing I talked about, we would see probably an increased price in quarter one, and we would expect that to remain range bound during the year. However, the positive is that our cost efficiencies in various areas are kicking in. JVML, with the largest blast furnace will provide a lot of operational efficiencies vis-a-vis our existing operations. And we will see the cost being significantly lower, which will structurally build into the margins. The second thing, as you said, is the renewable energy component. Our renewable energy has ramped up sharply, and we would be having more than a gigawatt of renewable energy by the end of this quarter. And that again would reduce our cost. Our operational efficiencies on our raw material sourcing and blending will again reflect in our costs. So all in all, we certainly feel that we will have a better operating environment and operating margin for the coming year.
What about BPSL? Mr. Acharya, that's quite a bit of a setback, right? And an impact on the future piece of your growth too. What happens next here?
So, as you know, the matter is sub judice and Supreme Court, so I will be able to share limited information with you. But, we would like to reiterate, number one, is that we have implemented the resolution plan in full compliance with the law. Secondly, the asset has been revived as it stands today with a very strong operational performance and improvement. We have analyzed the case the matter along with our legal advisors, and we feel we have strong grounds for looking at all the available legal remedies which are there, and we would do so.
Okay, so Mr. Acharya, tell me, does the volume guidance for FY26, does it include the assumptions of BPSL, and by when do you think you can actually resolve this issue?
The volumes certainly assume part of the BPSL operations as we see the situation today. In terms of the timeline which you asked, it will be difficult to really put a timeline in place when the matter is sub judice, but I think we will have to see how it goes as the days go by.
Got it. Okay. Now, how does this impact your expansion plans? Because your target was for this 50 million by 2031. Does the BPCL issue impact your expansion?
So, as in terms of our expansion plans, as you said rightly, 50 million tons by the end of the decade through brownfield expansions is something which is in place, and we are on track to get to that number. As far as the greenfield opportunities are concerned, we have two main big options. One is the asset in Odisha, where already our slurry pipeline is in the process of getting completed. Our pellet plants are under construction. The land is getting developed. We see a big opportunity to develop that facility, which will be again one of the lowest cost facilities, because both from import of raw material and from the movement of iron ore, you have an advantage. Also from moving out logistically into the market, you have an advantage. So it will be one of the lowest cost operations as we see today. As far as the Maharashtra asset is concerned, or the opportunity is concerned, which you're talking about, is the Gadchiroli area, where the mines are of good quality. We are already using some of the iron ore products from there, and it's a very good quality blend which we have. We see an opportunity to develop that area into a mining and a steel operation. And since it is very centrally located, it can actually reach the rest of the India by and large at a very optimum freight cost. So that's an opportunity which we are exploring.
Okay, Mr. Acharya, just one final word, because what the globe does has a big impact on metals, right? How do you see the globe from a growth perspective?
I think things look better. As we see today, one of the biggest challenges was the tariff escalations which had started, and we see some of that having come into control. There is a de-escalation, there is a discussion, which is very positive. Also from the geopolitical side, I think we see more balance. We see cooling off from various areas, whether it is the Russian-Ukrainian side or the Middle East side or even our borders. So that again is positive. So on a near term, I think India will continue to be the fastest growing major economy in the world. We see a very good opportunity for India to really become one of the largest economies in the next few years in the medium term, and very good opportunity in the long term. This year as well, I'm quite positive, because the disruptions which were there last year with respect to the elections, with respect to some disruptions on the weather, those are behind us. We will see a more smooth flow of capex across the year, which will build good demand. We also see private capex reviving, I would say, albeit in select sectors, but it is reviving. And we also see external companies, international companies, looking at building facilities in India, not only for the world, but also to take advantage.
I think there is a bit of audio glitch there. But Mr. Acharya, we got the gist of what you were trying to say. Sorry to cut you there, but we got the gist of what you're trying to say. Thank you so much for joining us today and giving us your thoughts. Really appreciate your time.